Joining us now is CFRA Research Senior Analyst Tuna Amobi. Tuna, great to see you.
Likewise, good afternoon.
CFRA keeping a buy opinion on shares of Amazon. Tell us why.
Sure. I think that despite some of the concerns that you guys mentioned, the soft guidance, the kind of slowdown in e-commerce business, the problems in India, and also the investment ramp up that they alluded to, all of those concerns, I think you're seeing why the shares are under pressure. Nevertheless, we think that you've got to take a little bit of a longer term view here. We think the story for Amazon now actually is changing from perhaps the focus on the top line revenue, where we're seeing, frankly, some deceleration in the core e-commerce business. And it's really no surprise there, because I think finally maybe the law of large numbers is finally catching up with Amazon. But when you look at the bottom line, I think really we are seeing a demonstrated kind of level of consistency. And a big part of that is really the shift in the business mix to higher margin advertising revenues. So you talk about the cloud business, look at the digital advertising, which is growing very, very nicely. And Amazon recently breaking through into the top 3 of digital advertisers. And then also the 3P, the third party business, where they kind of recently crossed over 50%. So that business is a very high margin business because there are no cost of goods associated with that. So when you put all this together, and remember last year they also had this Prime membership increase, almost 20%, which was very, very seamless, much of which drops to the bottom line. So in our view, to your question, our thesis remains very much intact. And also on the FANG topic, where there's been some concerns with some of the regulatory and privacy issues, I would argue that Amazon has navigated those issues relatively well compared to some of its peers like Facebook and Apple.
Tuna, I'm going to push back a little bit, because there are analysts out there that have actually dropped their forecasts and their price targets for Amazon. And they would actually say, look, the stock's up about 18% over the course of the last year. It is the largest publicly traded company by market cap, $840 billion right now. We do know that that can switch on and off a little bit. But even with the growth areas, I mean, how much bigger can Amazon get?
Look, that's an excellent question, right? It wasn't too long ago that we were talking about, Amazon hitting the $1 trillion mark. So I think as of now, frankly, I think Amazon Web Services, the cloud business, is a big part of why we're still positive on the stock. You guys talked about it a little earlier. But when you look at that business, the rate of growth and the potential addressable market, I think it's kind of not lost on us, frankly, right now. It's not far-fetched to think that AWS alone could be approaching almost half of the value of the entire company. We expect that business to hit $30 billion run rate next few quarters. And then also you look at the margin expansion, et cetera. I think it really sets up the company really well to be able to mitigate some of the declines that we're seeing in core business. And then you look at some of the incremental initiatives they're doing, the Prime membership. We know that last holiday season was really robust in terms of Prime membership trials. And we know the conversion rates in that business globally are extremely high. And remember, a lot of those subscriptions also are very high margin and drop almost straight to the bottom line. So there's a lot of tailwinds, so to speak, that we see mitigating some of those issues that come up quite a bit regarding valuation and competitive environment and the decline in core e-commerce business and things of that nature. So the way we think about it in a nutshell, it's kind of a risk-reward scenario. Sure, there's always going to be risk associated with a name like this with a very high earnings volatility, but ultimately I think the rewards we think outweigh the risk, and that's why we're sticking with a buy recommendation.
Tuna, you mentioned Prime memberships, and I know you cover Netflix also. We had you on this show just a week ago talking about Netflix after they raised prices. When we look at Amazon Prime and the original streaming, we talk about the streaming wars. How long do you think it's going to take for Amazon Prime, the streaming side and the original content, to become a significant driver of Prime memberships? I know they don't break those numbers out right now. How many people are actually paying for Prime to get the original content?
They don't. And actually, it's an interesting question, because when you look at some of the reasons why subscribers stick to the Prime membership and sign and renew at a relatively high rate, I think Prime Video is actually a big part of that. At the top of that food chain is shipping, free shipping, etc. But so to your question, they don't break it out. But we know that Amazon has invested aggressively in content over the last few years. That number could frankly, top 6 to 8 billion this year. So they're silently ramping up their original content, licensed shows, and we're seeing some traction and critical acclaim in some of those investments. the last Emmy nominations, etc. So Netflix and Amazon, I think, really have changed the game, and Hulu as well, in terms of the potential, possibilities for streaming service to become very formidable, players in the streaming landscape. And Amazon is right there, I would argue, with the best of them.
Tuna, Jeff Bezos, CEO of the company, also weighing in on the success of Alexa in the earnings release as well. It reads in part like this, quote, Alexa was very busy during her holiday season. Echo Dot was the best-selling item across all products on Amazon globally, and customers purchased millions more devices from the Echo family compared to last year, end quote. Your thoughts on the success of Alexa?
Well, I'll tell you, those products have been flying off the shelves. The last holiday season was no exception. The Alexa, Echo, Dot, all of those things, Fire Stick. The popularity of these products are massive. But I would also add a caveat that the company does not necessarily, make any amount of profit from those. In fact, I think they're probably offering them at cost. But their impact in terms of, driving, traffic and repeat purchases and other, core offerings cannot be understated. So look for the company to continue to invest in those areas. We saw in the momentum that they had in the Prime Day, carrying through the holiday season. And, frankly, I think the secular dynamics in terms of the digital voice assistants and the evolution of voice commerce really bode well for Alexa and some of those related products.